We start today's market talk. There is no fear for those who understand the process and its outcomes. So the problem isn't about investing itself. It is the toxic combination of impatience, lack of understanding, and access to speculative instruments. Now, key issues which we need to analyze. Firstly, RBI's MPC policy analysis. Now the idea is clear, forget about rupee, focus on growth. So RBI governor also signaled that he will ensure adequate liquidity to ensure that the rate cuts are passed on to borrowers. So there is going to be adequate liquidity in the system. Now aim of 25 basis point rate cut is to sustain and improve growth momentum, and intentions of open market operations which he signaled, and dollar rupee buy sell swaps is to ensure that there is adequate durable liquidity in the system. I had clearly mentioned about what is the implications of these swaps in dollar rupee they are doing, and about OMOs. It is very simple. It is just to ensure that there is liquidity in the system, so that the banks can pass on these rate cuts to the environment. And based on baseline projections of GDP growth and inflation, there is space for another repo rate cut of 25 basis point under the neutral stance right now. And this is what the market is celebrating. Now, the another issue would be US markets have recovered from the jitters about whether AI stocks are in a bubble, thanks to renewed faith that the Fed put will bail them out. So there is going to be an FOMC meeting on 9th and 10th December. 10th December, that is Wednesday. And prior to that, markets will move. Probability is now 87% of a 25 basis point rate cut at this meeting. Now, Fed rate cut will take some pressure. Hopefully, it should take some pressure off the depreciating rupee. And the other issue is Indian equity markets have underperformed massively. They are trailing emerging markets hugely due to high valuations, slowing earnings growth, tactical shift in global portfolios to China, higher tariffs on Indian exports, and weaker rupee, which is spooking the foreign investors. Now, talking about that, this week was one issue was the rupee. It broke that 90 barrier and then declined up to 90.5 and then recovered after some RBI action, etc. But it remains vulnerable. And once there is no confidence, there is no confidence in markets also because of that. The other issue was Indian government bond yield. So if you noticed, RBI has cut rate by 25 basis point. The bond yields only moved by 5 basis points. From 6.555, it came down to 6.5. That means that is 0.05%. That means the 25 basis point rate cut is not getting reflected in the yields. The reason is because the market is worried that government will have to borrow more. So they want, like in US, I'll show you how the US yields are going up. If the government is going to borrow more, then people want more returns for the money they are giving it to the government. Now coming to FI/DI data, this is very interesting. If you see here, FI remain net short on index futures. But so if you see here in index options, they bought calls and sold puts on Friday. So bought calls in index options, sold puts, they have become mildly bullish. That means, and though irrespective of that, they have around 1.21 lakh short positions in index futures, but options action is that they are turning bullish. Now, what is the pros doing? Pros, if you see here in index options, here they are indecisive in index futures. In options, they bought calls and sold puts. Now they have become strongly bullish. And these are the guys who are supposed to know what is happening in the market. Next is clients. Clients in terms of index futures, they are long. 86,000 positions, but they have reduced their index futures long positions. But on Friday, they sold calls and bought puts in index options. So they have turned strongly bearish. So now the whole setup has changed, and DIs continue to buy in cash. That's okay, and FIs continue to sell in cash, but smaller amount. So the net position now is pros are strongly bullish, clients are strongly bearish, and FIs are mildly bullish. So the whole situation turned now. And if you see here, the monthly data, they were 1.7 lakh short positions in index futures during the November month. It reduced on expiry to around Thursday, that is Sensex expiry, to 87,000. It has gradually increased to 1.23 only, not increased much. Though they have been selling in cash regularly and DIs have been buying regularly. But so if you see here, the market big move days are the ones where FIs turn bullish in options. That is, they buy calls and they sell puts. It is on those days the market makes big moves. All are those days only where the market has made big moves are the ones which is because of FI's action in index options. So you can understand which direction it is going. Now coming to US, this is interesting. Despite there is a signal that Fed is going to cut rates, the US bond yields moved up last week, roughly 3%. So it went up last week, didn't come down. Now dollar predictably sold off, right? Gold is consolidating. Silver moved up, and it's in a good momentum, around 3.5%. Copper also moved up. I'll explain what is happening with copper. Bitcoins were stagnant, nothing much is happening, but declined again below $90,000 to Bitcoin. Brent crude was static, didn't make any much kind of a move. US indices moved up, all of them, Nasdaq, S&P, Dow Jones. So they are all nearing their record territory again due to likelihood of another rate cut and possibility of Kevin Hassett replacing Jerome Powell next year, tilting Fed towards aggressive interest rate cuts. And inflation and labor market data reinforced expectations of another interest rate cut. But as I have shown you, US 10-year and dollar index moved in opposite direction. So what is happening is that the short-term investors, traders sold dollar on bets of an immediate Fed rate cut, because they can buy it. If the Fed cuts rate, the dollar will decline. They will buy it at lower levels. While long-term investors are looking for higher yield due to fears of inflation and government debt. And that's why the bond yields went up. Now, what is going to happen over the next 2 weeks is Fed is going to cut while Bank of Japan may hike rates. So that would weaken the dollar against yen. So that is one of the reasons for dollar weakness. But there is another issue. If Fed cut rates but signals that they will stop to fight inflation from here, then 10-year yield could stabilize and dollar might recover. So if you see clearly, if gold is a safe haven, central banks are buying, so it will continue going up. Silver, there is industrial demand, massive inflows into silver ETFs, it keeps going up. Copper, there is a supply chain issue. And there were fear of tariffs, so a lot of copper has come into the US pre-imposition of tariffs. So now there is a shortage in the other exchanges and their places all over the world, and that is why there is a short-term squeeze on copper. But there is nothing substantial which is happening with copper. So what is going to happen is that if Fed signals a pause, then these metals might pull back a bit. Right now they are going up because the the expectations are of a continuation in rate cuts. Now coming to India VIX. So if you see, India VIX has come down to 10.32 level. It has declined throughout over the last 2 weeks or so. From the highs, it went to around 14 odd levels, somewhere closer to the expiry. After that, it has declined and now has come down to 10.32. So that means there is no premium now in selling options. Hence, people are buying options, more intent on buying options. Now, Nifty, if you see here, it made a fresh all-time high and then declined. But if you see, it made a candle with the upper body and a long, very long, pronounced lower shadow, which indicates that there was a buying interest at the lower level and it recovered from there. So hopefully, with this kind of a momentum where it has reached back to 26,200 level out now, it should head higher. Now coming to the daily chart, so if you see, on Monday, it made that all-time high along this trend line, and then declined, took support at 20 EMA, and then has bounced from there. So this 20 EMA should somewhere around 26,000 to 25,900 should be your stop loss, and one can easily go long in Nifty trades from here. This is the simplest trade right now because you're not sure which sector will move, what has moved, etc. So this is easy. Now coming to Nifty next 50, it is not moving. It is at the same place, taking support at 20 EMA. So this part of the market is not moving at all. So this is why the portfolios are not moving. The other issue was Nifty Bank, fresh all-time high, then decline. And if you see on the daily chart, again, decline, took support at 20 EMA. Following the 25 basis point rate cut, impressive rebound. Weekly chart, as I showed you, small bodied candle with a pronounced lower shadow. So buying interest was at the lower level, and this is one which is in clear momentum. But there is a divergence here. I'll talk about it slightly later. RSI is good, moving up, so it is in good momentum. So one index which was moving up but has corrected after that is PSU Bank Index, because government said that now they were not too keen to get FDI into more FDI into PSU banks, etc., which was the news on which it was going. So this rally has kind of halted. So let's see if it can restart again. IT index is in clear upturn, and again, it should go up to around 39,000 plus, but I think then nothing has changed on ground. So this is just a bounce from the lows, etc. Once the results will come, we will see all that. It is the other reason why it is going up is also because people are expecting there will be some significant improvement in their earnings due to rupee weakness, but that doesn't happen because the contracts are hedged accordingly. Nifty metals above the all-time high, consolidating now, and it is waiting for the signal from the Fed. If they signal a pause, then it should correct. Autos should perform better because the monthly sales were good and there is a rate cut, so it should perform good right now. Defense is clear. There is clear weakness and it declined big time on Friday. The reason was the people were expecting there will be some announcement from Russia, etc. Nothing, no announcement, zero. So I think this will correct from here, and these are expensive valuations. So that is what it is. Midcaps have moved up to this 14,000 level. So they are showing strong momentum above the all-time high and have made a kind of a cup and handle pattern, and then it is breaking out from here. So it is looking good. Now the problem is small cap 100. This is what I was telling about. It declined around 2% last week, and on weekly charts it has broken below the 50 EMA also. But if you see on the daily charts, so if you see here on the daily chart, this is the 200 EMA. So, and this is the 50 EMA. So it is below the 200 EMA right now on the daily chart. So in my opinion, it is headed lower. So till the time you don't find the small cap index showing some bottoming out and trending to go up, don't try to average any stock or any of the broader market stock we are having, irrespective of the level at which you have bought and which is declining, and don't buy any new small cap stock. Simple. Till let it bottom out. It can go down to 17,200 level and then go up from here. Or there was this sharp rise here in May. Yeah, it can come down to these levels also. So don't try to bottom fish. You will just keep burning your money. Now HDFC Bank was moving up, and now there is a point about readjustment of Nifty Bank indices. So I don't think it will move up from here. It looks pretty difficult for it to go up. The other index, which other stock which was moving up, which was taking indices higher, is Reliance. Again, there was a news about starting of the proceedings for the Geo IPO. So I'm not 100% sure. Need to think about it very clearly as to what is there going to be any positive impact on Reliance because of a Geo IPO. It should be logically negative only. Infosys has bounced from the support level which I had indicated, the demand zone from 1400 odd, and now it has broken through the all the moving averages, and now it is headed higher. So hopefully it should go up. So IT is one, and RSI is also moving up. So IT is one sector where one should be long right now. Now I'll cover two stocks today. I just wanted to highlight what is the problem with the small caps and all that with respect to these stocks. So first is Voltamp Transformers. It designs and manufactures transformers, both power and distribution type. It is one of the most trusted names in transformers up to 220 kilovolt. So this one is up to 220 kV, and transformer and rectifier and Silcher, they are in higher category transformers, catering to private sector EPC customers across industries, power transmission and distribution, and renewable energy generation. It has a strong presence across diverse industry segments, including power, steel, cement, oil and gas, chemical and petrochemicals, data center, green energy, and commercial real estate. It operates 4 manufacturing facilities in Gujarat with a total installed capacity of 14,000 MVA. MVA is megavolt ampere. It is investing 200 crore fully funded via internal accruals to add 6,000 MVA of transformer manufacturing facility at Jarod in Vadodara up to 220 kilovolt, which will lift its total installed capacity to 20,000 MVA. The plant is scheduled to come on stream by Q1 FY27. It will ramp up to 60% capacity utilization factor by FY27 and to 100% thereafter. It remains focused on 220 kilovolt category, below 220 kilovolt category, wherein turnaround speed, reliability, and working capital discipline matters most. But the problem is it has got a lot of competition in this category below 220 kilovolt. There are a lot of unorganized players in this field. It commands premium realization of 13 lakh per MVA versus industry average of 10 lakh per MVA in competitive LVDT, that is linear variable differential transformer space, reflecting selective order intake and execution credibility. Order book is roughly around 1100 crore. So it does around 400 to 500 crore per quarter. So at least 2 quarters visibility is there. But as I was mentioning, they are working on good turnaround. So they are taking orders which are 6 to 9 months only. So that makes no difference. So them order book is reasonable. 9856 MVA. So that is also, so their capacity is 1400 MVA. So that is within their capacity. So what is happening? What is the problem with this stock is they have a installed capacity of around 14,000, as I told you, MVA. Now in FY25, their sales volume is higher than that. So that means they are operating right now at more than 100% capacity utilization factor. And that is the problem with them. They are operating at greater than 100% capacity utilization factor in FY26, and new capex shall help lift growth in FY27 onwards. So that means the growth is static right now. So what they are talking about is FY27 they will add 6,000 MVA, and then they would be able to grow. So this is why the stock is halting. So total capacity 14,000 MVA, two units, power transformer, distribution transformer, both in Vadodara. Uh, there is a capacity for power transformer, oil transformers, and dry transformer. So they supply this oil-filled transformers up to 220 kilovolt, then dry type transformers for various end market applications, compact substations 33 kV up to 2.5 MVA for smart cities, real estate, renewable developers, mobile substations, etc., and ring main units for distribution network, commercial complex, and campuses. So what is happening is you must understand the cycles. So in 2004 to 2007-8 was one power distribution cycle in country, and then what happened was that because of that their revenue went up, the gross margins and the EBITDA margins went up. Then the cycle stopped, and now then the cycle again started in FY20 onwards. So again the revenues have been moving up, gross margins and EBITDA margins have moved up. So it remains a cyclical business. Along with the government capex, etc., and it will move accordingly. Now, so one cannot just hold it forever. This stock it remains a cyclical stock. Now, sales volume, if you see, it was growing till FY10, then dipped, then again started going up, and it has, in terms of MVA, it has gone up. And similarly with realizations, as I was telling you, 12 to 13 lakh they are able to get per MVA. So this is 1.2 million rupees. So that is 12 lakh, 13 lakh they are able to get in FY25, FY26 now, and realizations have improved as their demand has increased and the prices are better. Now, if you see here, operating income is expected to be around 2,000 crore for this year also. So not much change is expected because there is a capacity constraint. The fresh capacity will come in FY27. So then I think they should get around 20% growth, and after that in FY28 because of that. So right now they are constrained because of capacity. EPS is likely to remain at similar level, 320 odd rupees. They have done, I think, around 160 rupees in first two quarters. So they should do around this 320, and then it is expected to go up to around 360 plus in FY27. So EBITDA margins have been, it has had its peak. So now it is declining, but should remain at this 17 odd levels. Revenue growth is expected to be around 15 to 18% over the next 2 years, and profit growth of around 10 to 12%. So ROE is also slightly coming down. The peak has been achieved, and ROC is also now coming down. And hardly any debt is there because the capacity expansion they are doing through the internal accruals. So if you see here, Voltamp, it went up, made a high closer to 10,000, then declined and has come down. Now after their earnings last quarter, it had a spike, but then it corrected. In my opinion, I showed you 320 this year and 360 next year. That's what they're claiming. But then you have to see how, because capacity expansion can always get delayed, so that risk remains. So if you get it, there is a dip, you get it closer to 7,000, because 10% stock can go down in one day. There is no problem, and go up also in one day. So somewhere closer to this 7,000, because once this breaks these level of 7,800, then it will fall very drastically. So somewhere closer to 7,000 should be a decent opportunity if you want to get this stock. But that is around that will be around 20p, which is reasonable. Now the other stock is Ahluwalia Contracts. So very interesting stock. Is a well-established integrated construction company with 5 decades of expertise in infrastructure development, turnkey solutions in engineering, design, and construction for public and private sector clients. It does this residential and commercial buildings, hotels, institution and hospital buildings, corporate offices, information technology parks, industrial complexes, automated car parking lot, townships, bought projects, metro station, depots, redevelopment, upgradation of railway stations, urban infrastructure, data centers. So the present ongoing projects up to 30th September is first one, the biggest one for them is the redevelopment of Chhatrapati Shivaji Maharaj Terminus CST at Mumbai, then India Jewellery Park Mumbai, Dahlias DLF 5 Gurugram, Signature Block Business Park, DLF City Center, Whiteland Corporation Limited Gurugram, Lal Bahadur International Airport Varanasi, Bihar Animal Science University Patna Bihar, Arbor Project DLF Gurugram, Tata Memorial Central Parel Mumbai. So they are doing diverse kind of EPC work. Now it has an order book of roughly around 18,000 crore as of 30th September. The order book is primarily composed of hospitals, commercial buildings, institutions, residential, infrastructure, and hotels. But the primarily it is residential complexes, which is roughly around 43%. By geography, it's all over India. East 15, North 50%. So primarily in North India, that is Gurgaon, residential thing. West 30%, South 4%, and overseas 1%. Central government, state government, and private segment account for 22, 7, and 69, respectively, with balance from overseas projects. So that is again a good thing that they are not too dependent on central government and state governments. During Q2 FY26, the company reported a sharp improvement in EBITDA margins to 10.9% from 7.3% in the previous year on the back of better execution. Margins are expected to sustain, especially with the pickup of the CST project in Mumbai and other large projects. So that should help them. So if you see quarterly results, they did around 16% year-on-year growth. Expenditure was up 12%. So EBITDA improved 75%. EBITDA margins improved 366 basis points. So basically, they have reduced their cost. So the cost of material, construction, expenses, etc., and subcontract work, employee costs. So that they have been able to reduce drastically, and other expenses, and that has actually that has gone up. Actually, sorry, that has gone up. So it is basically the construction expenses which have decreased, and the cost of material which has decreased, which is helping them. EBITDA margins have improved, and profit was up, nearly doubled, and EPS from 5.7 went to 11.8. So what they are expected to do is they're expected to do around 20% growth in FY26 and around 15 to 20% in FY27. So with making a PAT of roughly around 314 crores and 361 crores. So taking a mean of around 350 crore for FY26-27, 350 crore, their present market cap is 6653 crore. So they are less than 20 times now forward. So that is okay. They are expected to do around, as I told you, 19-20% growth. PAT growth is this year is going to be good. Next year will bottom out. So roughly around 15-20% PAT growth. EBITDA margins are going to be hopefully sustained at 10% plus. EPS, so as I showed you, 47.54. So taking a mean of around 50 odd, you can take a EPS, and rest of the things are okay. So if you see here, this stock, it moves with results, etc. So results came, stock went up, is now correcting, consolidating below 1,000. It's a call right now because if 50 rupees in the forward PE, and with it doing some good projects, so at 20 times this is not expensive, and since they are not dependent on government money also, so it is reasonable. Only risk is that these EPC players are really not firing as such. So if you get it at lower levels around 880 odd, that should be a good entry point, because that should be the distress levels. Right now it is consolidating, so it's above all the moving averages, so that should not be a problem. So one can look at this stock. I finished. We'll take questions now.